Hello, thank you so much for tuning in to Morning Markets. We've got a busy show for you. We're awaiting the IPO of Instacart, and we're going to speak with the fund manager who said a couple of months ago the NASDAQ rally can continue. It's far from frothy until we get Instacart's IPO. Well, here we are getting Instacart's IPO, and he's not too keen to touch it. He'll tell us why. And as we look at the data in China, energy market seems to be taking a little bit of comfort that we're seeing some signs of stabilization. We're going to speak to Ruchir Sharma, who thinks we may have reached peak pessimism when it comes to China. And of course, markets are waiting for the Fed to unveil its latest interest rate decision. They're sitting down today. The decision is tomorrow. We'll talk about how oil could be a complicating factor with Danielle DiMartino-Booth, former Federal Reserve insider. That's coming up in just 15 minutes' time. But first, we've got to deal with the inflation that just came out in this country. It's hotter than expected for a second month in a row, sitting at around 4% on a headline basis, 4.1% on a core basis. We saw pricing, the odds of a Bank of Canada rate hike increase on the back of this. Let's bring in Carlos Capistran. He's the head of Canada Economics at Bank of America. And Kathy Lien is a managing director at BKForex for some perspective. Carlos, coming into this number, you had written to clients that given the economic weakness that we've seen out of Canada and the fact that the bank has already undertaken such a tremendous rate hiking cycle, that we're probably close to the end, if not the end, of the Bank of Canada raising rates. Did today's inflation number change your mind?
No, it doesn't come high. It was a big surprise, and certainly it puts upside risks to my call that the Bank of Canada is done. We need to see. I mean, this is just one print. It was a bad print for sure. Not only because, as most people expected, headline inflation increased. It increased more than people expected, but basically for the reasons everybody thought it would increase, which is gasoline prices. The problem really is that core inflation also increased, and that is not exactly what the Bank of Canada was looking for. So certainly this means that there are upside risks for the Bank of Canada. They could hike again. I'm thinking the economy already contracted, the unemployment rate seems to have bottomed out. So I will wait for the next inflation print, make up my mind. There's one inflation print before the October Bank of Canada decision, but I still think they're done.
You know, you mentioned where we are in the economy right now. The last time Canada sort of missed on inflation earlier in the year by just a decimal point, Bank of Canada came off the sidelines, resumed its rate hiking. What is different this time?
No, what is different is that the other data point that surprised then was GDP growth in the first quarter. It was a big surprise to the upside, and it made the Bank of Canada revise the measure of output gap that they have. And I think the surprise and the fact that they had to hike again had more to do with reacceleration of the economy than what happened to inflation. So unless I see reacceleration of the economy, I still think that they are done. Now, if we start getting some data that shows that the unemployment rate goes down, that the labor market remains extremely tight, accelerates, the GDP accelerates, then I would be concerned, but that doesn't seem to be the case with the data that we have now.
Kathy, we saw the reaction in the currency market. The Canadian dollar spiked. We saw yields spiking and got this hot print on the inflation side. You've got oil prices moving higher. What does this mean for the direction of the loonie?
Well, we had been positive loonie, throughout the past couple of weeks on the back of the recent increase in the oil prices, as well as the overall performance of Canadian data. I actually think, that the Canadian data has been consistently positive in the sense that we had an improvement in the IVPMI. We had, job report stronger than expected. We have PPI, CPI stronger than expected, and we have retail sales later this week that I can think will also show some strength. So I do believe that there's further upside in the Canadian dollar. If you were just talking about interest rate hikes, and in some ways, and certainly not to as weak of a degree, the Canadian economy is similar to the Eurozone as well as the UK economy. And both of those central banks are either just raise interest rates or looking to raise interest rates this week. The ECB surprised with a quarter-point hike. The Bank of England is looking to raise it by another 25 basis points. So I think that the chance of another Bank of Canada rate hike is greater than the market anticipates. And in some ways, the recent strength of the Canadian dollar reflects that. I think, the Bank of Canada is very much an inflation-fighting central bank, and the latest numbers will worry them. And if you take a look at the Northern Hemisphere and North America in general, it's certainly outperforming, other parts of the world. And that is what is creating the overall demand for the currency. And, that's certainly, on the radar, because the outperformance of the economy, I think, could lead the central bank to deliver that final rate hike. We may not have seen the last one yet.
That's interesting. And Carlos, I'd love for you to pick up on that point, because it's sort of counter to how you're viewing it. And it may all hinge, does it all hinge on energy prices? How do you expect the bank to think about that? Because I think their own forecasts of crude have it at $75 per barrel.
No, certainly oil prices is something that is going to help the economy, and it pushes inflation up. Traditionally, the Bank of Canada looks through the increase in inflation that comes after higher oil prices. These are different circumstances for sure. And don't get me wrong. I mean, of course, the risk is that the Bank of Canada needs to hike again, and this inflation report that we saw today goes in that direction. It's just that when I put everything together, I still think that the rate is already quite high, and it takes time for the rate to impact the economy, although it seems that we have already seen some impact on the economy. So I think they are good. Of course, they remain extremely hawkish, and of course they can hike again. Yes, for sure, that can happen. All the risk is on that side. And again, as I mentioned, I think it will depend on the next inflation print. If we continue to see this reacceleration of inflation, then yes, they can hike again. But we'll see if core inflation, as I expect, resumes the downward trend, then I think that they could wait a little bit more before thinking about hiking again.
There's all sorts of ways, you both know this, to torture the inflation data to sort of confirm the narrative that you want. And some who say we've done the job in inflation will point to when you strip out energy, when you strip out the rising costs associated with rate hikes that have filtered through in mortgage costs, you are seeing areas of subdued pricing action. Even food inflation, which is still elevated, came down meaningfully from the month before. Kathy, could this be a fly in the ointment when it comes to your expectation that we could get another rate hike, that when you parse the data, it's easy to make a case that, okay, underlying inflation is cooling?
There's no question that underlying inflation is cooling globally, but the question is it cooled enough for central banks to feel that they've done, as you said, done the job? And I think from what we heard from the European Central Bank, what we heard from the brand new Reserve Bank of Australia governor, and what we'll probably hear from the Federal Reserve tomorrow, is that they think inflation is still too high. So I don't necessarily feel that the Bank of Canada feels that their job is done either, especially when all these other central banks are feeling that they're unsure about whether core inflation has dropped and would drop on a continuous basis back to the levels they feel comfortable with. I don't think that we're there yet, because we're not at $100 oil yet, but we could be there, in a couple of weeks. And that will really translate into, more increases in prices for gas and things like that, that could lead to inflation remaining stickier than they would like.
Carlos, Deputy Governor Sharon Kozicki speaking this afternoon not on this topic, but it'll be interesting to see if she finds a way to weave in the today's inflation print. What will you be looking for? What kind of clues, what kind of answers do you want about how the bank is thinking about the inflation print?
Well, I would be looking at what they say about, for instance, the output gap. I mean, in my view, the output gap in Canada has peaked. And what this means is that although the job on inflation is not done yet, as long as the output gap is going down and getting towards zero, this means that the Bank of Canada and other central banks may not need to hike more. So this, of course, again, the job is not done on inflation, so they are far away from cutting. But the question is, could they just remain here? The rate is already above neutral, so this is a tight monetary policy. So maybe they can just sit here for many months and wait until inflation goes down. So I would look for cues on how they see the output gap and where this is going.